Hello everyone, I am Rachel, the Vice President as well as your host for today, and welcome to Road to Financial Freedom, hosted by SIPS, also known as Sunway International Business Society. Now, before we get started with the interview, let me give you a quick introduction about SIPS. Our vision is to expand our influence via communication and liaison with diverse parties, as well as provide students with a pathway for their personal and professional growth. And our mission is to provide students with resources and opportunities that strengthen their skills, as well as become a platform where students from all courses, all fields can network and thrive together. Today, we are delighted to invite Mr. Macks Ong, Financial and Career Coach, as our interviewee for this session. Now, without further ado, let me pass the floor to Mr. Macks.
Right. Thank you very much, Rachel. So basically, thank you all for joining us on this very Friday. Tomorrow is election. I believe maybe most of you here who are above 18, you will be voting tomorrow. So, remember to vote. And I think today's session will be more to road to financial freedom. And that's something that, I can't guarantee everyone to have financial freedom by the age of 30. But then what I share today might be useful for you all, in your early 20s and maybe your road to early retirement, which we call FIRE, Financial Independence and Retire Early. Of course, I myself, I believe in FIRE, but then not really want to retire early because it's quite a boring thing to do to retire early. Yeah, so after I read a few FIRE articles, that is something that I've taken note as well. Yeah, okay, so I'll share my screen. So in between, if you have any questions, feel free to drop in the chat section, which I will have a look as well. Yeah, okay. So so we shall start. Give me a second. Maybe let me move my camera over. Okay. Can you all see me? Can already, right? Yeah. Okay.
Yep.
Okay, are you able to see my screen as well?
Yes.
Can. Okay. So basically, just to give you guys a bit of background on myself, basically I'm also with one of the $1 Million Agency team and also a real estate team leader as well. So I used to be in the oil and gas consultant, one of the oil and gas consultant in British Petroleum. I'm also with the Big Four last time. Currently, I'm also leading a team in the tax advisory team for the SME clients market. Yeah, and I myself, I do, look into some investments, and also I'm a HRDF career and corporate coach. So that is something that I do passionately, and also something that I'm very close with as well. Okay, so, I think before I move on to the session, if you have any queries or any questions about career development, about what to invest, or how should I manage my money, I think you can connect with me either on Instagram. Actually, all social media I'm on there, so you can connect with me on Instagram or on LinkedIn. If you want to keep it professional, stay until the end. Then we will be also having a bonus for you guys, for those who are connecting with me, as well as also chatting with me. Then after that, I'll give you guys some bonus for today's session as well. Okay, so I think back to the question, I think we got this question from you guys. When and how should students start financial planning? And could you please walk us through the step-by-step process of creating a financial plan? Yeah, because first thing first, based on my experience, when I was a student, it's quite difficult for me to, start making money, because I have to juggle studies and most of my classes, I was an ACCA student, so most of my classes were really long hours, and it's quite difficult to even find time to actually make a side income. However, for those of you who maybe have some extra time, this is something that you guys can actually explore as well. Yeah, so what I'll be sharing is for those who have additional time, and as an adult, once you have salary, once you have income, how are you able to use side hustle as well, a way to actually generate more income for yourself. Okay, so here are the 6 ways to set yourself up for financial freedom in your 20s. Why I say in your 20s, because this is the best time for you to learn and also to be intentional about what we call wealth lah. Yeah. And also to set realistic expectation. You're not gonna be financially free in your 20s. Yeah, I think a lot of people wants to be millionaire in their late 20s or by 30s. Of course, if you work very hard, or if you're in the right field, or if you are in what we call sales or investment, that could be possible. However, it's like 1% of the whole population. Yeah. But however, you are able to achieve this goal at your age, maybe late 30s, 40s, or even 50s. Yeah. So this is the idea of how can you compound your wealth in order to, gain financial freedom. Actually, back to the question, what is financial freedom? Maybe I can see from the chat box, what do you guys think financial freedom is to you guys? Yeah, because, a lot of people ask, road to financial freedom, but what is financial freedom to you guys? Yeah. Maybe, for those of you, we have about 16 people here today, you guys can share in the chat box, what is financial freedom to you guys? Yeah, before we continue. Okay, I think there's Junjie, can buy things that I want, correct? I think buying things that you want is also something that, we need to satisfy our needs. That's something that, we always try to be able to achieve. Income is more than expenses. Definitely. I think for those of you who are in accounting, if your income is more than your expenses, you will definitely gain a profit, or you gain excess cash flow. Yeah, I think for business as well, if your revenue is more than your expenses, definitely you have more profits, and that's actually good for the shareholders and good for, the business owner as well. To be able to support ourselves without others helps. Yeah, I think for Davina, very true, because once you're financially free, you don't have to rely on your parents anymore. That is something that, for throughout our period, maybe up to university life, we might still need financial support from FAMA, Pharma Scholarship. Yeah, so that is something that we hope that everyone is able to get out of that pharma support at an early stage lah. Because why? You don't want to also burden your parents when they are growing older, because they are also going into retirement. Yeah, a lot of times I feel like young millennials, right? They tend to neglect that actually your parents need to retire also. That's why you also need to manage your finances well in order to make sure that your parents can retire well as well. Yeah, so that's something that we hope to educate and also help the young millennials to be able to manage their finances and also help their parents to retire early as well. Okay, so able to spend whatever I want without depending on anyone. Correct. Yeah. Okay, but I think back to my understanding of financial freedom for me lah, is basically having the freedom to do whatever I want without thinking about money or thinking about the paycheck, right? So I think the first thing is time lah. Yeah, because the moment you become an adult, right, actually the commodity, the most I would say most precious commodity is actually time. Yeah, you're actually exchanging your time for money. Yeah, so if you were to read some of the business books or what, right, they would say that how can you make your time more valuable that you can charge higher, to your clients, to those who needs your services, and look that the value you are, because that is where the strongest commodity is lah. Okay, so first thing first, I think you have to understand inflation and valuation. Why I say inflation is because as a young millennial, this is something that you might think that you can get a nasi lemak for RM2 today, but that will not be the case in the future as well. Yeah, it might increase as well. I think nowadays even some nasi lemak is going at RM10, RM20. So things are getting more and more expensive. Okay, and However, some value of certain products have different meaning, like property market, it might be inflated, and the value of it, is also a safe place for you to stay. So this is something that you need to know, which items will make you better when you purchase, or, does the value I get from purchasing it will exceed the price I'm paying for it? Yeah. So, as an adult, we have to understand, first thing first, inflation, second thing, valuation. Is this something that this item, if I buy, will it generate income for me? It's just example, like today I buy an iPhone, for an influencer, buying an iPhone means that this is something that will help them make money by, capturing good quality videos. Is this something that will help me generate value in the future or not? Yeah. So I hope you guys can able to understand this as well. Not only you purchase something that you want, but purchase something that is able to generate the value. It not necessarily has to be a physical item, it can be a course as well. Yeah, because we are all about upskilling, reskilling. Yeah, it's no longer just I finished degree and that's all. Yeah, the moment you get out to the working world, right, you would have to upskill and reskill all the time. Yeah, every single year, maybe every single quarter. This is something that is necessary if you want to be ahead in the corporate world as well, or in the business world. So next, I would say is building passive income. This world is quickly changing as well, and more people realize that there would be events that might cause them to lose their jobs. Yeah, for example, a Twitter takeover by Elon Musk, and then he's laying off staff. Yeah, and Facebook just lay off a bunch of staff. So these are the kind of things that even tech people might not be basically be ready. So for us, those who are from the business field, are we ready for this kind of exposure or this kind of events in the future? If you lose a job or you get laid off, this could actually happen as well. So for these reasons, it's important for you to start learning what is passive income and how to generate this revenue even when you are sleeping. Okay. And the benefit of passive income is definitely it removes the stress or financial stress that you have in terms of, because this is running, I would say, semi-automatic lah. Yeah, I'll explain why it's semi-automatic. A lot of people think passive income is just passive and is actually something that you do not need to put in effort. But actually, the understanding of passive income is actually, it's actually requires some sort of active, commitment in order to generate this kind of passive income. And it's actually quite gradually, very slow, and it takes time. However, it grants you the freedom, the time, which I will give you some example later, because this is something that I'm also very close with as well, and something that I'm trying to explore and build more passive income as well. Okay. So what does it mean by passive income? Yeah, and what is it different between active income? So active income, I think most of you guys know, it's the constant effort on ongoing basis. It could be your day job, yeah, and it could be a business that you are in. Okay, your writing business or something like your copywriting business or your social media business. Then next will be passive income. On the other hand, requires one-time massive work. Yeah, one-time investment that will generate income as you sleep. Yeah, it requires inactive participation, perfect for lazy smart people. Yeah. Why inactive participation? There will be good examples like properties and all. Okay, so no passive income in Malaysia is totally passive. This is actually agreeable as well. There is upfront effort or cost to start it. Yeah, so in order to start this kind of passive income, you will definitely have to either put in upfront effort, or if you have the skills, then you put in upfront effort. If you have the cost or you have the capital, then you will require a big sum of capital to start it in order to generate this passively. Yeah, and there might be some ongoing works to maintain it as well. Okay, but after that, everything you can leave it and run it on itself. Yeah. Okay, so the passive income, number one, I would say, is basically it's basically properties. Yeah, so what this entails is buying and renting out property space to tenants. And how to make this profitable is the amount of rent must exceed the amount of monthly or yearly payments you make. Yeah, not just mortgage, but also insurance and taxes that you will be paying. Yeah. So some steps to simplify this type of passive income. First, you have to research the location and demand. Yeah, if you are planning to, in the future, planning to invest in a property, if your parents are planning to invest in a property, always look at the location and the demand of that space. Are you gonna buy it, or are you gonna lease the property for rental purposes, or for what we call an Airbnb lah? Yeah, renovate it optional, but common in order to attract tenants. Yeah, so for example, basically, if let's say your unit is a very high-end unit, then you will definitely get high-end clients like expats and all. So this is something that, depending on what markets you're trying to target, then that is the type of rental that you will get. Okay, and then next you'll be hiring property agents to handle all your rental inquiries and draw contracts, property managers to look after your properties if it's a Airbnb or a hotel. The thing about property, it's, there will be leaks, there will be, cockroaches, there will be rats. It's pretty common thing that you will see in older properties as well. Yeah, or even security issues. So these are the things that, property managers, or you yourself, if you're managing the property yourself, you have to look into it as well. So the best part is receiving rental checks on a monthly basis, from your tenants. Sometimes if you have commercial properties, it's also quite a big sum of rental as well. So the pro is, if you get tenants for the whole duration of the mortgage, you're essentially getting the property for free by the end of the term. Yeah, so this is what we call so-called no money down. Yeah, so if you get a good tenant, you get a good rental, then your property is basically paid off by the tenant. Yeah, okay. So next is basically okay, this is just additional. Yeah, so alternative is basically, you can see, is a REITs and trust lah. So if let's say you are not into buying properties, you can look into REITs as well. Yeah, this is something that you can look into, REITs, Singapore REITs as well, if you're into Singapore kind of economy. Okay. So the second passive income, I would say, is intellectual property. Yeah. So what are the types of intellectual properties that we can see here? If you are a software developer, maybe you can create a software. Yeah, you can create apps. Okay, websites, books, ebooks, or books, songs. Graphics, photographs, videos. Sell them on an online platform, or either directly or via advertising revenue. Yeah. So if you have a website, then maybe you can have some advertising revenue. If you have a blog, that is also something that we call intellectual property lah. Okay, so to make this profitable, you have to put in some effort, either networking or promoting, your digital product. Okay, and then these will actually automate and passively, because this is something that can be done, I think, very easily as well lah, if you have the passion, and if you're able to show that you're able to give good work and good results lah. Yeah, so research what is in demand, so something that you can look into, and make sure that the intellectual property, it's not being stolen as well lah. Otherwise you get into some IP issues. Yeah, package it and target it to the right customers. Okay, and then choose the right selling platform and receive royalties when people buy or use it. Yeah. So I think the best part about this is you will definitely have a lower startup cost and infinite income potential. Yeah, because just one item, you can definitely generate infinite income potential. Yeah, and then most IPs don't make much money, but due to too much competition. Yeah, so there is a lot of competition out there, but however, this is something that you can try and start out first. Have a taste of what is digital products and all. Okay. Next would be passive income in Malaysia. Number 3 would be lower risk investment. Yeah. Basically, grouping a few types of investment over here for your reference. Mutual funds like ASB, ASW, FD. This is something that, if let's say you guys have not very in-depth investment knowledge, right? FD would be a good place for you to start, compounding your money as well. Some banks I would recommend would be Hong Leong Bank, where they're giving about 2.45 or something like that. Yeah, some banks are only 1 point something. So this is something that you can look into as well. Unit trust, stock shares from blue chip companies that gives dividends. Yeah, means dividends kind of shares lah. Okay, big stable companies that everyone has heard of. Example, Maybank, okay, ETFs and REITs, okay. So the oversimplified step that you want to do for this type of investment is choose the right vehicles for you. Probably the hardest part is, if you are Boomi, then you have ASB, okay. But the rest of everyone, you have to research a bit more on the types of brokerage fee, because different platforms might have different brokerage fees, yeah, and that will actually eat into your income as well. If you are not disciplined enough, yeah, automate this as well, contribute on a monthly basis, allocate maybe a minimum sum, let's say if you are making allocate maybe about 5 to 10% for a start, for this kind of investment, for the lower risk one lah, then you will be able to receive such dividend on a what we call a yearly basis lah as well. Yeah, so this is the easiest type of passive income to get into as well. Yeah, great for those who are long-term investors, and you will tend to forget and not look into it lah. Yeah, so for example, you lock an FD in for 12 months, and then after 12 months they give you the interest. Yeah, this is something that if you really have excess cash, don't just leave it in your bank account. Yeah, I mean, FD you can actually withdraw one. Yeah, you can take it out if you have emergency. However, you won't get the interest. But if you're able to meet the contract period, let's say 12 months, then you'll be able to get the returns lah. So if you really have excess cash, and don't just leave it hanging or sit in the bank. Yeah, let it grow in all these what we call a lower risk investment lah. Okay. But the cons is not much control lah. So the interest rate is being determined by the platform that you're using. And you have to understand that what are the withdrawal strategies that you will have to look into when it comes to early withdrawals. Okay. Yeah. So next one would be passive income number 4, higher risk investment. Okay, so this is a more trickier segment, which you need to do a lot of your own research. Okay, where we have P2P lending platforms, ECF, cryptocurrencies, or other types of investment kind of scenario lah. Yeah, I would suggest if you really want to allocate some of your funding to this kind of platform, try to pick a legit platform. Yeah, check into which platform that is listed as unauthorized investment platform in the SSM or in the Securities Commission. Yeah. And look into it lah, and research the market condition. Everyone's what is the industry saying, what is the review like. Okay, and then after that cap the limit. Okay, so basically this amount of money is the money that you're willing to lose lah. Yeah, I think a lot of people is also looking into cryptocurrencies as well. So if you are okay to lose this amount of cash, and then you won't have to worry, then okay, then you can maybe put aside and see if this is something is it the right time to go in, and then after that acquire and see it grow in a longer term. Yeah, I would say if you really want to go into this, it's either you are a very good day trader, or if let's say you are a long-term investor lah. Yeah, I think for me myself, I follow a lot on Warren Buffett, and also the investment strategy is always long-term investment and invest in quality companies lah. Yeah, so this is something that if let's say you have some sort of capital, then you can look into this as well. Yeah. Okay, so next would be keeping valuable items lah. Yeah, I think for those of you maybe you're not into this kind of things, if let's say you are having collectibles, or if you can see like over the recent years, it will be either sneakers or even rare collectibles. Last time it used to be gold, antiques, and rare collectibles. Yeah, and even like some sort of old currencies as well. Yeah, but nowadays there are many different things. It could be bear brick, it could be other collectibles and stuff like that. Yeah, I used to be in this space as well. but it really takes a lot of time, and also you need to be a hobbyist lah. Means something that you're really passionate about it, that you also are very familiar, because you are the expert in the field, then only you're able to identify which are the rare items. Yeah. And then this is also actually kind of risky, because sometimes you will have to hold this thing and you never know when you'll make profit until you sell it. Yeah. So like some of the stuff that I hold, it could hold by about 2 to 3 years, and then you make quite a good amount of profit. But is it worth the time or not? Yeah. Okay, so this is something that you have to consider as well lah. I'm not saying that it's not possible, but it's something that you can consider as well. Okay. So next would be the referral type of investment. This could be what we call MLM, or it could be any other things that Wei Shang, or nowadays you have a lot of affiliate marketing kind of promotion. If let's say you have some products that you're selling and then you're able to do affiliate marketing, this is also something that you can actually get referrals and also earn. Yeah, I think some platforms, also investment platform, if you refer a friend, then they give you certain amount of upfront cash. I think this is also a way where you gradually generate passive income as well. Okay. So I think next one we want to look into is how do you avoid bad debts? Yeah, I think we got a question on this as well. Let me have a look. Give me a second. Yeah. So I think one of the question that we have is, how can individuals with bad credit overcome this problem? Okay, so I think when it comes to bad debt, right, you have to look into it, whether is it credit card debts or student loans. You have to make the smart decision in terms of borrowing money lah. Yeah. Okay, so you don't have to attend a university like we see here in order to get better income, okay, after you graduate. However, getting into bad debts at a very early stage, right, it could create much more financial burden to you as well lah. Yeah. So because if you have a lot of debt, then that might be able to limit you whether you are able to buy a house or not. Okay. Yeah. Okay. And what is a good debt? Okay, so before we go into bad debt, I just want to touch for everyone, what is a good debt. Debt can be differentiated into two debts. Yeah, one we call a good debt, one we call a bad debt. Yeah, so here are the concepts of good debt, where a loan is able to increase your net worth, yeah, and generate more income. How do basically business owners, right, generate more income? This is what they call leverage. Yeah. But however, you have to make sure that the model that you're doing is able to consistently generate the income that you desire, yeah, in order to able to build your net worth. Okay, so firstly, I think I would say higher education, because if you have higher education, you are able to get better pay. You're able to prove to people that you're on a different level, you have different skill sets. Yeah, so this is something that we always emphasize. Education is very important, even though let's say there are a lot of successful people who are not highly educated, but with higher education, it will give you higher chances of accessing to all the resources that you need. Then next would be SME ownership. Yeah, making money with more monies. Yeah, being a small medium enterprise owner, that will actually also help you to generate more money. And then next would be real estate lah. Yeah, borrowing money to buy real estate. Okay, and with an interest rate of maybe I would say about not very high, I think about 4%, or yeah, around there lah. Yeah, and then this is something that a lot of people will look into as well, especially real estate. Okay, so what is a bad debt? I would say bad debt would be characterized as debt that does not add any financial value to your life. Yeah. Aside of that, debt can also cost you more money in the long run. What are the types of characteristics of a bad debt? Is buying items that depreciation over time, yeah, such as a car. Yeah, so if you're into sports car or what, unless you have a business mind where you can actually buy a sports car and then you rent it out. Yeah, I mean, we do see some of this kind of concept as well, where during the downtime, then they will actually rent this car out. Yeah, that's also a way to generate income. Yeah, unpaid credit card debts. Yeah, the thing about credit cards, right? It's a very brilliant thing where you are able to, use upfront cash, but you have to remember to pay, the statement balance and not only pay the minimum amount. Yeah, I do see a lot of mistakes, even young working adults, right? Only paying minimum amount and then, snowballing the interest of their credit card debts. Credit cards has one of the highest debt. Yeah, I think a lot of people actually get into bad debt issue because of credit cards lah. Yeah, okay. And then next would be high interest loans lah. Okay, so if you are in a very very bad credit issue, right? Talk to some of the what we call, if let's say you're looking to buy a house or what, right? Talk to some of the mortgage consultant. How can they help you to restructure your bad debt? Yeah, this is something that they will look into, and it will take time. Yeah, because in order to restructure, you have to make sure that everything, your CTOS, your secrets, everything is okay. Yeah, and all of this takes time, and it requires time to prove that this is the amount of income you have. Yeah, if you, let's say you haven't declared the income to the tax authority. Yeah, if you have rental income and all, or you have side hustle income. Yeah, a lot of times I think freelancers have the most difficult chance of getting a loan from the bank. Yeah, so how are you able to document this and prove to the bank that, hey, I'm getting constant income even from my freelance job? Yeah, I think these are some of the things that, if let's say if you plan to actually make a lot of money from freelancing, things how to structure it into a business in the future. Okay, so how to pay off debts? I mean, there's this way where we call a snowball method, where discover this is one of the most effective way of paying off debt lah. Yeah, by focusing on paying down the account with the smallest balance first. You pay the smallest balance first, then after that moving on to the next stage. Yeah, or what we call, how can we consolidate the debt? Yeah, consolidation of debt. Yeah, so these are some of the things that you can research and look into it lah. Yeah, hopefully that most of you here are not into this kind of bad debt or credit issues, but if you are, you can reach out to us, and then we can see how we can help you lah. Yeah, okay. Start investing. I would say try to learn investing at a young age. If let's say you're not you don't have the capital to invest first, start reading or start looking into the books and start understanding. There are a lot of simulations out there as well. I think a lot of also investing competitions, and then Bursa is also doing a lot of all types of campaigns and workshops. So this is something where you can compound interest, and the longer you have your money invested, the higher the potential exponential growth can be. Yeah. So I've listened to this podcast where Warren Buffett and also his right hand man, they invest in companies in the longer term. And even though there are times where the stock price actually drops, right, when they stretch over the long term, right, they still get a pretty high amount of return as well. Yeah, this is what we call a compounding over the years. Yeah, so there are times that your stock price will drop, there are times that the stock price will go up, but if you stretch it over the years, then you will get a pretty reasonable amount of average return lah. Yeah, okay. So even if you really have nothing to invest, at least you could do is to educate yourself on investing, on how money flows into society, learning about saving accounts, stocks, bonds, mutual funds, index funds, real estate. Learn about this kind of how each tiny commitment is able to add up and grow up to over $1 million when you finally retire lah. Yeah, I'm saying that this is something that you don't learn just until 20, you learn all the way until you retire, which is maybe 60. Yeah, so this is something that you might have to try to start today. And number 5, I think we all love to buy stuff. 11/11, Black Friday, our favorite days. So I think a lot of times try to avoid unnecessary spending lah. Yeah, I mean, as if you can, try to, I mean, especially for the ladies lah. I know lah, everyone love to buy clothing, right? So you have to buy the latest collection and all. So I think that is something that you also try to be frugal, and only buy within your means first at the early stage, and until you are able to afford all of this what we call luxurious item, right, then only you consider buying it. Yeah, because you don't want to make yourself so burdened, or you look good on the outside, but deep down inside your bank account is like very little digit lah. Yeah, I think I've seen a lot of people where they wear branded stuff, but they are actually suffering financially as well. Okay. So next would be patient. Everyone wants to get rich quick. Yeah. Get financially free very fast. But I think deep down inside, I'm sure all of you know what you want to do in future, or some of you might not know yet, but you already have some sort of idea that I might go this way or that way. Yeah. So it's either this or that. Yeah. I think a lot of times there is no right or wrong, or which path you choose will decide, because there are times that you might be from accounting, but you will be exploring another career in the future. Yeah, I do see a lot of people maybe from an accountant becoming an artist, an accountant entering into real estate field, an accountant entering into many different fields, or from business you entering into other areas as well. So you don't have to limit yourself lah. And then also never forget about investing as well. That is also one way to grow your money. And be patient lah. Yeah, because you're now still at your 20s or early 20s. Start focusing on either how to develop yourself for your future career, the skill sets. What I'm surprised is I do see a lot of especially for those who are in the software development kind of environment, right? Because if let's say you're a tech guy, or you're into software development, or if you're into computer science, right? Basically, a lot of things is on self-learning one. Yeah, all the coding language and everything. So if let's say you're very capable, someone actually got you to freelance it, you're able to do all of this, outside of your free time. Yeah, this is something for you to develop yourself ahead. And there's no limit on, how good you want to be. Yeah, you can be as good as someone from Google as well, as long as you're able to put in the time and effort and explore, those kind of knowledge. Yeah, and the rest will work itself out over the coming years. Because if you have the knowledge, you have the value, right? People will know that they would want you to be on their team. Yeah. Not necessarily you have to start your own business. I would say not everyone is suitable to become a business owner. But if let's say you think that you want to take a chance and become a business owner, do it when you're young. Yeah, because no harm losing. However, be prepared. You have to be mentally strong as well when it comes to starting up your own business. Okay. I think we got this question as well. We understand that there are three main types of financial plans: cash flow plan, investment plan, and insurance plan. Could you please explain the details of each plan and what they are used for? Yeah. And I also got this one is, what are the components of a good financial plan? I think these two are very similar questions lah. Okay. I think I have a very a quick chart over here. Firstly is what we call an 8 core financial planning. Yeah. So firstly is creation. How are you actually starting to create your net worth? Okay. Are you looking into it or not? Yeah. Do you have savings to cover any unexpected? So normally, right, we will look at this, what we call a financial health check, right, for me. So do you have savings to cover any unexpected emergency and avoid going into debt? Yeah. I would say if let's say for those of you who have a salary, normally for those of young working adults, we advise at least have 6 months of your 6 months to 1 year of your salary income in order to able to survive, because these are your emergency money lah. Yeah. Okay. So if you have six months to 1 month in your bank account, then it's okay. 1 year. Okay. Then after that, do you want to decrease and pay off your debt or not? Always try to pay off your debt as fast as possible if you can. Okay. Yeah. Like even for some of the housing loan that we are serving, right, we will always try to pay off faster if possible, because that will actually reduce our principal, and then also reduce the amount of interest that we have to pay. Yeah. Do you know that if let's say you buy a property over 30 years, right, you're actually paying double for that property. But if you're paying it upfront or we pay so-called in cash lah, yeah, then you're only paying the actual value. But if you're paying it using a housing loan, you're actually paying almost double of the property price. Yeah. You can do the calculation yourself lah. There's a lot of mortgage calculator these days. Yeah. So this is something that we will always try to guide the clients that we work with lah. Yeah. Do you need to put together a budget to better manage your money? Yeah. I think a lot of times for those of you, maybe you are still a student or you are a young working adult, right? I still see a lot of people have this habit where they actually have this what we call a budget app or a expense app, yeah, or an income app, yeah. There's a lot of budgeting apps right now on your mobile phones and everything. Look for the one that are the most popular. Google it or track it on Excel or track it if you are fancy, track it on a dashboard. Yeah. Yeah, basically document how you spend your money. Or today I've eaten this and then I spend this. Then you roughly know by end of the month what is your expenses. Then by end of the month what is your income. Yeah. So your income minus expenses, then you have excess cash. Then this is where you think, how much should I save? How much should I invest? How much should I put it as an emergency fund or a future potential fund for maybe traveling. Yeah, apportionate lah, depending on your excess cash. Try to apportionate it. This one could be, oh, I need to buy a new phone, I need to buy a car in the future, or I need to service my PTPTN in the future. Then after that, or this amount is for FD, or this amount is for maybe high risk investment. Yeah. I would definitely advise is if you really want to try out high risk investment, don't go all out. Yeah. Don't put all your eggs in one basket, I would say. Just only allocate a very minimum percent lah. I would say if you really want to go 10%, yeah, if you want to go into high risk investment. Okay. I do know some people has very high don't let your emotions, because when it comes to investment, don't let your emotions control. Yeah, I think you can look into this thing called emotional investment lah. Yeah. Okay. Creation, I would say real estate investment planning, and then preservation. Yeah. So once you have created the income, right, you have to find ways to preserve it. Yeah. So one thing is asset management, cash flow optimization. Yeah, cash flow optimization is, how can you manage the in and out of the cash flow of the business? Is either a business or the asset management. Asset management is you have many types of assets. Yeah, it could be plant and machineries, it could be cars, or it could be assets that can generate income for you or grow the business. Yeah. Retirement life goal advisory. This is something that, what is your retirement goal? How much you want to retire by how much you want to achieve when you retire at the age of 60. Yeah. Because by the time let's say you have 1 million, then you divide by the balance 20 years, because 60 to 80 you won't be working. If let's say you decide to work for your whole life, okay, from all the way from 20 to 60, 40 years, you will be working as an employee. So you'll be contributing to the EPF, you'll be contributing, your employer will be contributing to the EPF, you will also be contributing to the EPF. Yeah, I think EPF is also one way that it's quite a brilliant thing for those who are looking into passive income, because the amount of return that they're able to generate is quite consistent as well, about 5% like that lah. Yeah, so it actually helps you to able to have a retirement fund. Yeah, I think EPF only applies to those who are employed. Yeah. So basically, if let's say you are a freelancer, you are a business owner, you can also do self-contribution. Okay. Yeah, self-contribution as well, in order to also generate this kind of consistent return. Okay. Then tax planning advisory. I think tax planning advisory comes in many ways. It's either you are into property investment, then you want to set up a real property company, or you are into businesses, then you want to learn how to actually get tax incentive for your businesses. I do see a question over here. What are some tips of minimizing our taxable income? Yeah. There's just one thing here, there are a lot of, if let's say for those of you who are in accounts, right, I'm sure you will learn this thing called reliefs, right? Yeah, try to maximize your reliefs. But if you look at all the billionaire out there, right, they don't pay themselves very high salary one. Yeah, they get the returns in the form of dividend. Yeah, or they get the returns in the form of other forms of income. Yeah, so that they don't have to pay very high personal tax. Yeah, you realize that actually, if you are employed, right, you will be maybe paying more high personal tax than your bosses. Yeah. Okay, so there are many types of way of getting income if let's say you're on the investor sector or the business owner sector. Yeah. Okay, so that is also one way. And then next would be the wealth protection plan. Wealth protection plan is all about insurance and everything, key man insurance, business insurance, fire insurance, your property insurance. Yeah, car insurance as well. For those of you who are driving a car, remember to buy insurance for flood. Yeah, don't save the few hundred ringgit or tens of ringgit. Just don't buy the flood. Yeah, because now you go to KL quite often, and now it's also rainy season. Yeah, so if you forget to buy the flood insurance, remember to renew it on the next round. I think a lot of people actually overlook this as well. Yeah, if you have a property, remember to buy fire insurance. Remember to buy leaking or damage insurance. Yeah, so these are very common thing. Yeah, even I myself, old properties that are leaking or there are fire or these are the things that you're able to claim. Yeah, but without insurance, who's gonna bear? All these are expenses when it comes to running so-called passive income, property management. Yeah, so wealth protection plan. Okay, and then next would be distribution. So when you have creation, you have preservation, you have protection, you sure want to distribute. This is what we call generational wealth. Yeah, how come billionaires can pass down from generation to generation? This is called estate planning. Yeah, you can set up a trust, you can set up a different foundation or all, yeah, where you can do estate planning. Yeah, estate planning can be in the sense that, oh, okay, if let's say I pass away, then this amount of money will belong to my next of kin. Yeah, so this is what we call estate planning as well, where it's also very important that you leave something behind for your loved ones. Yeah, like for example, if let's say your father and your mother, they would definitely want to leave something behind for you if let's say they are no longer around, one of the parties lah. Yeah, and it could be husband and wife as well. They have a newborn kid. It will be a very financially burdened if let's say the husband suddenly is the breadwinner and is no longer with the family. Yeah, so these are some of the things that when we talk about financial planning lah. Okay, so I think for even myself and a lot of people out there, I come from ACCA background. I also have a bachelor degree in finance and all. But 99% of my financial knowledge, right, is actually learned outside of the classroom, learned outside the universities. Here are some of the podcasts, that can either 10x your business or investing skills for free lah. Yeah, just for you guys to have a look. Yeah, I think if you have Spotify, you can check out all of these podcasts as well. The first one is All In. Yeah, if let's say you want this list, right, you just have to connect with me on Instagram or LinkedIn and say, hey, I joined your workshop. You can tag me as well so I can repost. And if you're on LinkedIn, just say hi, and then after that connect, and then we can chat. Yeah, so these are basically All In is actually 4 active venture capitalists where they share their views about all things business, technology, and politics. Yeah, so what you will learn here is you will learn about business lessons learned the hard way. Yeah, so the great thing about these kind of podcasts is you learn all the mistakes that is being done by either venture capitalists or what we call Silicon Valley people. Yeah, how to think about an investment and how politics affects the markets. Yeah, so that's why it's very important to even vote for this GE15 because the politics will affect the Malaysia market as well. Yeah, okay. So next is Afford Anything. Yeah. This is by Paula Pan, where she answers everyday money questions and interviews a variety of financial experts. And what you learn is real estate investing, personal finance tips and tricks, how to build a better life and achieve financial freedom. Yeah, I think this is something that we all want to learn on a day-to-day basis. I think the best part about podcasts, right, is what I do during my free time is basically when I drive to work, right? Because I'm based in PJ and I go to KL for work, and just to go to KL takes me about 1 hour normally in the traffic jam lah. Then come back also another hour. So this 1 hour, what I do, I listen to podcasts. Yeah, and I still get to learn new things while I'm on the way home, or if let's say you're taking the train, or you're taking the bus. Yeah, this is something that you can learn on the go. Yeah, because or during your lunchtime, your free time. Yeah, this is something that you can learn lah. Then Bangladesh, two crypto enthusiasts interview a variety of experts and explain everything in plain English. If you're into crypto, this is the newest thing lah. Yeah, breakdowns of DeFi, NFTs, Ethereum, and Bitcoin. Yeah. And business breakdown. So deep research and interview that explains the inner working of public stocks and private companies. So what you learn is business model. Yeah, I think business model is very important before you start a business. Yeah, and then how to read and interpret financial statements. Yeah, so how many of you here knows how to interpret a financial statement in order to invest? Yeah, this is something that is very important as well. And how to build a bull and bear thesis. Yeah, so before you invest, and then you go and understand and then build your own thesis. Okay, then next would be a variety of interviews with entrepreneurs about their struggles, lessons in building great businesses, and what you learn is what it's really like to start a business, how to mentally prepare for the challenges you will face, obstacles that entrepreneur face along the way. Yeah. So these are some of the things that you might want to explore as well if you really want to go into the business world one day. Yeah, Bloomberg Masters in Business, a weekly podcast with Barry Reholtz, look at people's ideas that shape markets, investing, and business. So interviews with experts in real estate, stocks, and investing, and how to think through macro and microeconomics. Yeah, so macro and microeconomics will definitely affect the market as well. And I think I will touch on a bit on also the insurance side of things lah. Yeah, so I believe that most of you here also already have an insurance. If you do not have an insurance, at least a medical insurance, feel free to come and look for me in order to get yourself covered. Because if you don't get yourself covered at a very young age, right, what happens if let's say you have cancer? We do see a lot of young people in their 20s, getting cancer, and they have to fork almost hundreds of thousands or millions in order to get themselves recovered. Yeah, so these are the kind of things that if your bank do not have a 6-figure or 7-figure a bank account, always look for a medical card first. Yeah, it doesn't cost much. Yeah, only 100+ ringgit per month. Yeah, and it could save you millions. Yeah, I think the one that it's available right now most commonly is about 1.5 million annually. Yeah, which will be renewed. Yeah, 1.5 million is a lot. So by just paying about 100+, you're getting 1.5 million. I think it's a bang for your buck lah. Yeah. Okay, so what are the type of insurance Yeah, maybe you guys can share in the chat as well. Yeah, since we are talking about financial planning, I think just now I went into some of the personal finance stuff, but now we are entering into the financial planning part lah. Yeah. Yeah, I think just now also, to answer one of the questions is what websites or platforms you recommend to use to obtain information on financial planning. So just now was some of the platforms lah. But however, if you connect with me on LinkedIn or Instagram, I will give you additional documents that I have a PDF on it as well. I think Rachel also saw it just now. So I think this is something that you guys will be beneficial for you all. Okay. And I'll recommend you like what books to read lah. Yeah, you're able to get access, like what books you can read and all. Yeah. Okay, so anyone would like to answer, what are the types of insurance that is available in the market? Tokyo Marine. Oh, okay. Aside of the brand name, yeah, maybe you can specifically mention, yeah, AIA. Okay, I guess most people understanding is insurance, AIA, Tokyo Marine. What else? We have Great Eastern, Prudential. Yeah. So, but out of all this, right? Do you know what they actually provide or not? Yeah, I think a lot of times, right? Especially for those of you who are in maybe your early 20s, right? When you come out to the working world, no doubt you'll be approached by someone who will say, hey, you are free for the drink or not? Yeah, I want to share you some details. Yeah, so when they come out and share with you, right, you only know about Tokyo Marine, you only know about AIA. But what else you know about insurance? You do not know anything. So they'll provide you. So I mean, insurance are actually here to supposed to cover you for your safety, your care, your disaster, your injury, your risk, your travel, accident, and you know, all types of policies. Yeah. So types of insurance that you may need in your lifetime. First is what we call I think I see Junjie here say travel insurance, saving insurance, health insurance. Great. Okay. So health insurance for medical. Then after that, you have life insurance. Life insurance is, you know, if you pass away, your next of kin might get a reasonable sum of money in order to sustain their life being. Okay, disability insurance. Yeah, I think a lot of people do not know that there is this thing called disability insurance, where if you are disabled, you will get paid as well. Yeah, okay, one finger, one eye, one toe, or one leg. Yeah, okay, as long as, you know, it's sorted down in the policy, and if you are disabled, then you're able to claim that amount of money as well. Homeowners and renters insurance. Yeah, like I mentioned just now, you know, it's very important to buy homeowners and renters insurance as well for your own house. Yeah, you know, burglary enter, you know, I myself, we also experienced before where, you know, burglary enter the house, and, you know, all the, expensive items were taken. However, you know, we're able to claim back from the insurance. Yeah. So these are the benefits of having this type of insurance. Yeah. Or maybe a house got a major leaking issue, you know, from the roof, you know, because now it's like, a rainy season, right? So you get a leak on the roof, and then after that, you're able to claim this as well. Okay. So auto insurance, you know, having flood or even an accident. Yeah. Then you're able to claim auto insurance. So I think this is just some background on the company that I dealt with as well. Yeah. So one of the largest top almost 3 million customer. Yeah, we provide like life, Takafumoto, corporate solution, accident, health, home, and retirement planning as well. So corporate solution will be like those employees kind of welfare benefit kind of insurance. Okay. AIA Vitality is more for the fitness, where you actually exercise, then they reward you with cash vouchers, different types of vouchers, touch and go e-wallet. Yeah, so it's actually encouraging like the customer to exercise. So yeah. Then if you are looking to explore as well, they are using the latest technology for support as well. Yeah, and 18 months tailored program for you to learn. These are the amount of sales that the team has generated in 2021, about 5 million. Yeah. I think looking into this, right, what I want to share is basically financial pyramid is also something that very important for all of you. Yeah. So firstly, we have to look at what we call the wealth protection. Yeah. So throughout your lifetime, right, you will definitely be hospitalized sometime, if you get into an accident, critical illness, if let's say touch wood, you so happen, get cancer or something like that. Yeah. Or, someone got cancer, then, you will have to get a critical illness support as well. Then life, if, pass away, then definitely life. And then accident, do you know that you can also claim for accident as well? Yeah. So there's an insurance for accident, not only hospital. So hospital and accident is separately one. So these are the event that is out of your control. So it's even more necessary to get it covered. Then next, wealth accumulation. Okay, so we have EPF, saving plan, fixed deposits. Yeah, so these are some of the things like, if you can contribute more to your EPF, then why not? Yeah, okay, so saving plan, how much you are willing to save every month, and then FD, how much you're willing to put into FD to accumulate your wealth. So these are the things that you can control. Then next will be wealth creation, which I talk about stocks, properties, high risk investments. Yeah, stocks will give you dividend or maybe give you high returns when you sell your stocks. Then high risk investment, it could be other, that gives you good yields. Okay. Then after that, ultimately, when you have the wealth you need, you have all the investment you need, then you have to look into wealth distribution. Yeah. Why wealth distribution is important, even for your parents, is because this is where it comes to preservation. You need to have a will in place, a trust, or we so-called a hiba. Yeah. HIBA is more flexible in the sense that if let's say you assign to because on a general insurance, right, if let's say you're not a family member, normally you're not entitled. But if let's say boyfriend want to give to girlfriend, they can use the HIBA way to give. Yeah, but if you buy a normal insurance or a normal one, most of the time it's only going to the family members. Yeah, so this is also another way that you sometimes see that people will actually buy HIBA to give from boyfriend to girlfriend, that kind of approach lah. Okay, yeah. So trust as well. Yeah, so like there are many ways to look into it as well lah. Okay, so most people's financial pyramid is the balik one. Yeah, so they will put their wealth creation, stocks, property, and high risk investment first. So all the money will go into here. Okay, and then next they will look into wealth accumulation, EPF, saving plan, fixed deposit. Then they will look into their wealth distribution and then wealth protection. So this is always at the bottom. Yeah, so what happens here is, let's say one day, right? Oh, okay, you got into an accident and it requires 100,000. So you would have to sacrifice all your wealth that you have generated on top of here to pay for your medical bills. Yeah, medical bills could the medical inflation is almost about 10-15% every single year. Yeah, medical inflation itself. Okay, so I have a client who went for a female surgery, a very simple one, just to cut off a cyst. Yeah, it cost her about I think almost 50,000. Yeah, so if let's say for a young 20 years old adult to fork out 50,000 just like that, yeah, how much will it actually impact your bank account? Yeah, she was very glad because she came back from UK, and then she did, I think her medical card was like very old. The parents bought her when she was very, very young, and maybe I myself, I even have medical cards, where they have a limit, annual limit, or a total limit about maybe only about 20,000 or maybe 50,000 or 100,000. The olden days, the card were very small. Now then, after that, once she revised, she got this 1.5 million at every annual. You get to refresh. So these are some of the things that you as a young adult, you have to take note lah. What are the types of products that is available out there? And financial pyramid is like just like building a house. Once you have the right foundation, you're able to support whatever you want to do on the top. Yeah. So like we mentioned, it's not just about making wealth, generating wealth. Yeah, it's also about how can you protect the wealth above. Yeah, I think a lot of people forget about this. They are so focused or so engrossed in how can I take high risk investment, but they forget to take care of themselves, in case of health or this kind of thing. Yeah. So these are some of the checklists that you can look into. Medical insurance is to pay for your medical and hospital bills, so you don't have to. Then term life insurance is to cover, total permanent disability. If you become total permanent disability, your loved ones, if you pass on, and then after that, compensate for your loss of active income due to death or total permanent disability. Yeah, can be used to pay for living expenses, nursing fee to care for you, settle debt and tax owed. Yeah, do you know that even if let's say you pass away, right, your next of kin might need to have to help you to pay the tax one, Yeah. Doesn't mean that you die already, no need to pay tax, Yeah. So and your debts also, someone has to bear your debts. Yeah. So if let's say today you borrowed a mortgage loan and you never buy a what we call a MRTA or a mortgage insurance, right? And then so happen you pass away. Someone has to actually pay the loan for the property. Yeah, otherwise it will kena long. Yeah, so these are some of the things that you have to take note as an adult lah. Okay, so critical illness cover diagnosis of critical illness, compensate when you diagnose with it. Like I mentioned, living expenses, other medical related fees, and settle debt and tax owed. Yeah, so you have cancer, right? You might have to go a lot of treatment. Yeah, so and all this treatment will cost money as well. Yeah, so these are the things to look at. So let's say, for example, today you have a family here who are person at work, so you get a very comfortable life. Yeah. And then next is what happens if let's say you're in a wheelchair or in a hospital, or maybe suddenly a cancer. Okay, Then after that, the whole family, one of the breadwinner has gone down. So you went from comfortable to maybe poor or maybe charity. Why charity? You might need to get help from others. Yeah. Okay. And then what you can do here, if you have money, then you can use the money at work to give your family a comfortable life, which is what we call financial planning lah. Okay. So looking into this lah, let's say for example, if let's say I take a young man who's 21 years old making 3,000 a month, which will be annual income about 36,000, and he stops working at 60 years old. Okay, so what do you think his potential income will be? Yeah, assuming that his income will not increase until 60 years old, which is 36,000 every year. 21 times 60 minus 21 times 36. Yeah, can anyone like key in the chat box if let's say you are still with me listening? Yeah, so basically 36,000, 21 to 60 years old, what do you think this person's potential income will be? Yeah. Yeah, so 36,000 every year annual income. But I'm sure that, as you develop yourself, you will definitely make more and more income over the years. So this is just a sample scenario lah. Yeah. Okay, so Rachel say 1.4 million. Yeah, that's right. So basically 1.4 million. Yeah, and let's say for this 1.4 million, right? By the age of 60, do you think it's enough or not? Yeah. So, some of you might say, only by the age of 60, if I make 36,000 per year, I only get 1.4 million. Yeah. So this is where, you have to find ways to, develop yourself, make your annual income grow bigger and bigger. Okay. And if I say, hey, if let's say I today use 2% of your 1.4 million in order to protect your 1.4 million, is that okay or not? Yeah. And then you have to pay for 28,000 per year. Then I think some of you will say, I have to pay 28,000 is per month, for the 28,000 is per year for the 1.5 million coverage. Means you actually buy a 1.54 million insurance coverage, which will cost you 28,000 per year divided by 12 months lah. Yeah. Okay. So some of you will say, oh wow, that's a lot for a year. Okay, 28,000. Then if let's say we cover for your first 10 years from 21 to 31 first, then we will cover 36,000, which is 36 times 10. So we will cover your first 10 years first. So a lot of times, right, when it comes to buying insurance, right, you will see that actually they will try to cover your first 10 years first, then you might have to revise again because of due to medical inflation, due to other reasons. So you can see here that, okay, first 10 years is 7,200 per year. So 7,200 you divide by 12, then you will get an amount. So 7,002 divided by 12 would be, let me have a look. Yeah, 600. So, you'll be paying just 600 ringgit per month in order to get 360,000 coverage. I think that's pretty worth it as well. Okay. So next is, what is this number? Can anyone tell me what is 28,000 to you guys? Yeah. What do you think this number is? 28,000, And anyone can guess what is 28,000? Okay, so 28,000 is basically the average number of days a person live, which is about 76.71 years, about averagely 80 years. Yeah, so you guys will be living 28,000 days. Yeah, so this is something that you have to hold close to your heart. If you are at 20 years old, you still have 56 more years. Yeah, which maybe will be about 10 plus thousand. Yeah, so you still have, everyone have like 10 plus thousand days lah. Yeah. Okay, so So this is something that you have to look into lah. Yeah, everyone throughout their life, they have 28,000 days. Okay, so this is how we count our days. Yeah, so out of these 28,000 days, right, at the age of, let's say, 0 to 20, you know, all of us, the two things that we will do is only study and play. Yeah, so these are the two things that we will do. Yeah, even as a young adult, we also study and play. Yeah, if you don't have a choice, then maybe you have to come out and work lah. Okay, and then from 20 to 40 is either you get your first job, you get your first car, you get your first house, you get your partner, you get married, and you get kids. Yeah, 20 to 40. I'm sure, you know, we hope to, you know, achieve all of this within this range. Okay, then at 40 to 60, you get your second job. I mean, you get your second car, you get your second house, you get kids again. Yeah, so more kids. Yeah, so more expenses. So these are the things that, you know, you'll be facing. And then at 60 to 80, you'll retire, right? Okay, so looking at this, right? Then after that, your kids, they will have to study and play again. Okay, look into this again. During this stage, right, at 0 to 20 and 60 to 80, there will be no income. Yeah, so you see this 28,000 days minus 14,000 days. Out of these 14,000 days, right, you know, half of it you do not have income. Yeah, so, you know, you have to understand that your income that you will leave behind is for 14,000 days. Okay, so a lot of people actually overlook this. So the four biggest fear before you reach 60, okay, is what if I cannot work to 60? What if I don't reach 60? Okay, how much is enough to retire? Can I ensure that my children start life with the right foundation? You know, I'm sure your parents gave you a great life, gave you the you know, the luxuries to enter into great university. I think this is something that, you know, we want to pass on to the next generation as well. Yeah, so, you know, it's not easy lah. That's why, you know, if you're able to get you know, well educated, good access to education, you know, a good life, a roof over you, I think this is something that you have to appreciate lah, because you know, your parents is also finding ways in order to save their 14,000 days as well. Okay, yeah, because this doesn't only apply to us, it also applies to every single one, every single adult. Okay, so firstly, what if I cannot work to 60? Then it will be mainly either critical illness product or income protection. Yeah, okay, so these are some of the things that, you know, adults can look into. What if I don't reach 60? Life insurance. Yeah, you know, if you pass on and then if you don't reach 60, you need to leave something behind for your family members or what. Yeah, so these are something that, you know, you'll be surprised actually rich people leverage this in order to generate wealth. Yeah, what is the fastest way to get 1 million? Is to buy 1 million insurance with less than 1 million. Yeah, okay, so you know, rich people will buy tens or hundreds of millions of insurance. Yeah, in order to able to cover, you know, the amount of insurance that they desire lah. Yeah, so how much is enough to retire? You have to make sure that, you know, you're able to cover 28,000 days. Okay, so you just calculate lah, each day how much you need to spend, then you times 28,000 lah. So assuming I would say a more conservative 100 ringgit a day, 100 ringgit times 28,000, 2.8 million. Yeah, okay, so 2.8 million divided by half will be 1.4 million. So you still need 1.4 million in order to survive the 14,000 days lah. Okay, and then can I ensure that my children start life with the right foundation? Yeah, so this is where, you know, the guarantee paid out. So if let's say you have life insurance, you definitely have guarantee paid out lah. Okay, so I think these are some of the difference between Takaful and conventional insurance. You know, contributed by donations from a participant and pool of fund. Conventional is mainly you're paying a premium to receive a coverage. Anybody can buy it. Takaful is more of a full pool of fund and Sharia compliant as well, for those who are Bumi over here. Yeah. Okay. And then conventional insurance is more for legal instruments like stocks and bonds. Okay, so what happens if there's profits in the funds? It'll be shared among the participants and operators, and dividends are returned to shareholders. Okay, and yeah, I think roughly that's all from my side.